Elon is not going to buy Twitter. Where did you hear that before? From me.
Previously, Tesla opened the colossal Austin Gigafactory while Elon Musk surprised the world by announcing he was buying Twitter. But there would be more surprises in store, this time courtesy of the Standard & Poor's ESG Index, also known as the Environmental, Social and Corporate Governance Index.
You would think that if there was any company that would be recommended based on environmental and social reasons, well, that would be the world's largest electric car maker, Tesla, revolutionizing the push away from gas-guzzling cars. Not the case, though, according to Standard & Poor's. And as you know, Standard & Poor's is the world's largest stock indexing company, and that means trillions of investor dollars are pegged depending on the companies they include or exclude from their indices. As you can imagine, Elon Musk was not happy about this decision. He tweeted that Exxon is rated top 10 best in the world for environment, social, and governance, ESG for short, by S&P, while Tesla didn't make the list. ESG is a scam. It has been weaponized by phony social justice warriors. And he also tweeted, followed that up by saying that S&P has lost its integrity.
But the hypocrisy. All right, so if he's not on it, ExxonMobil, to this point, how are they on it? Pepsi and Coca-Cola. Have you ever heard of the diabetes epidemic in this country? What about McDonald's? How are they on it? Same thing. You want to talk about socially responsible? None of these companies should be on the list if Tesla's not on the list.
So while Elon and Tesla felt hard done by Standard & Poor's, the next drama starts, this time with Bill Gates, who is known for which of the following: speaking 7 languages, jumping over a chair, or completing 2 PhDs.
Is it true that you can leap over a chair from a standing position?
It depends on the size of the chair. I'll cheat a little bit.
Yes!
Some background on what's been said in the past by Bill.
Yeah, we have a long-running dispute between the two billionaires, which might not be helping things. The latest with Bill Gates casting doubt on Tesla's plan to get into long-haul trucking. Gates writing in his blog that the problem is that batteries are big, they are heavy. Even with big breakthroughs in battery technology, electric vehicles will probably never be a practical solution for things like 18-wheelers, cargo ships, and passenger jets.
Then it was rumored that Bill Gates shorted Tesla stock.
It's a text message discussion between you and Elon Musk, so the owner of Tesla and recently Twitter. The screenshots were leaked on Twitter, and Elon Musk a few days ago, as you know, confirmed this discussion happened. So in this chat, Elon Musk said that he can't work with you on philanthropic projects because you were shorting on Tesla, basically trying to make profit with the fall of Tesla's stock price. And Elon Musk sees this as contradictory to the desire to fight climate change. As he says, you should support Tesla's electric development.
Well, Tesla's not short of capital, and Tesla's done a fantastic job. The cars are great. I give a lot more money to climate change than Elon or anyone else. I give lots of philanthropic dollars. I back companies. You know, electric cars are about 16% of emissions, so we also need to solve that other 84%. But, you know, he's done a great job. But somebody shorting his stock doesn't slow him down or hurt him in any way.
Elon Musk now accusing Bill Gates of funding a smear campaign against him. Gates' foundation reportedly donated millions of dollars to several groups, hoping to push advertisers into boycotting Twitter once Musk takes the helm. When somebody shared the article to Twitter, Elon simply replied, "Sigh."
Yeah, I love the comparing Bill Gates to the pregnant man emoji. But that was related to Bill Gates pushing the climate agenda, even asking for donations to his climate initiative while shorting Tesla stock. So if you're trying to wean the world off of fossil fuels, why would you short Tesla stock?
And just in case there wasn't enough drama surrounding Elon,
he says, in the past, I voted Democrat because they were mostly the kindness party, but they have become the party of division and hate, so I can no longer support them and will vote Republican. Now, watch their dirty tricks and campaign against me unfold.
Meanwhile, what's happening with the Twitter deal?
Elon Musk tweeting over the weekend about Twitter, predicting that the number of robots on Twitter is much worse than people know, questioning the company's 5% number. Elon Musk, of course, put the deal to acquire Twitter on hold, demanding more data on how many fake accounts there are on the platform.
Then we got some major news.
Elon Musk has called off his deal with Twitter, claiming the social media network made false and misleading statements about its user data. But the breakup fee could carve a chunk out of the billionaire's worth.
Breaking news here at 5. Elon Musk wants to call off his deal to buy Twitter,
giving his advisors the thumbs up to send a letter formally notifying Twitter of the termination, claiming Twitter has not complied with its contractual obligations. For nearly 2 months, the company has failed to provide information about fake or spam accounts. Twitter says only 5% of its accounts are fake. Musk alleged for weeks that up to half of users on the platform could be bots, constituting a material adverse event.
The war is far from over. Legally, Elon Musk could face a breakup fee of $1.4 billion, and Twitter's board says it will make him pay.
Their chairman tweeting their plans to enforce the merger on the price and terms agreed upon. We are confident we will prevail.
What followed? You guessed it, more drama.
This morning, Twitter taking Elon Musk to court, the social media giant suing him for $44 billion in an effort to enforce their original merger agreement.
Elon Musk is escalating his legal fight with Twitter, announcing he's counter-suing the social media company. The drama comes after the Tesla founder rescinded the $44 billion contract to buy the platform, accusing the firm of misleading him regarding its tally of fake and spam accounts.
Elon Musk's battle with Twitter has just had its first legal skirmish. Elon Musk's lawyers have argued that the trial over his bid to withdraw a $44 billion deal for Twitter should be delayed, and it's due to start next month. The team wants extra time to investigate recent allegations made by Twitter's former head of security, Peter Zatko. He's the whistleblower that alleges Twitter doesn't know how many spam bots and fake accounts are on the platform. Twitter's attorney fired back by arguing that Elon Musk was simply looking for reasons to ditch the deal. Elon weighed in on the court case on Twitter, of course, saying if Twitter put as much effort into bot spam removal as they do into subpoenas, we wouldn't have this problem in the first place. The judge adjourned the proceedings without a ruling.
So while all this drama was playing out, Elon did share his views regarding whether he would reinstate Donald Trump's Twitter account.
A little bit of developing news from the tech world, from the man in line to run Twitter, Elon Musk, who's telling the Financial Times that once he takes over the company, once he takes over Twitter and that deal closes, he would take away the permanent ban on former President Donald Trump, saying it was not correct in his view to ban Mr. Trump. He says he thought that was a mistake.
He has publicly stated that he will not be coming back to Twitter and that he will only be on Truth Social. And this is the point that I'm trying to make, which is perhaps not getting across, is that banning Trump from Twitter didn't end Trump's voice. It will amplify it among the right. And this is why it is morally wrong and flat out stupid.
Meanwhile, Donald Trump had his own thoughts on Elon.
A feud is intensifying between the world's richest person and the former president of the United States, with Elon Musk tweeting that it was time for Donald Trump to, quote, hang up his hat and sail into the sunset. The Tesla CEO went further, saying Dems should also call off the attack, adding, don't make it so that Trump's only way to survive is to regain the presidency. The pointed Monday night Twitter post came just days after the former president mocked the billionaire at a political rally in Anchorage, Alaska, about Musk trying to back out of his $44 billion deal to buy Twitter.
Elon is not going to buy Twitter. Where did you hear that before? From me. From a fake account. She says fake. A lot of them. Nah, he's got himself a mess. You know, he said the other day, oh, I've never voted for a Republican. I said, I didn't know that. He told me he voted for me. So he's another bullshit artist, but he's not going to be buying it. He's not going to be buying it.
Musk also said Trump's claim that he told him he voted for him was, quote, not true, and that Trump would be 82 at the end of his term, which is, quote, too old to be chief executive of anything, let alone the United States of America. The billionaire is making enemies at a rapid clip, the arch nemesis being Twitter, which fired back at Musk on Monday after he said he was moving to ditch the takeover deal, accusing Musk of, quote, knowingly breaching an agreement to buy the company.
So while the drama's been playing out, how has Tesla, the company, been performing? Well, let's have a look at our first data point.
We're also watching Tesla because Tesla sales, they continue to surge in California. I mean, honestly, leaving the competition in the electric dust.
This is new data from the California New Car Dealers Association. These are the #1 models overall, not just among EVs, but overall. Model Y is #1, Model 3 #2. The Tesla brand sales up 82%. A big part of why Tesla does so well in California is because it's got the Fremont plant right there. It is the largest auto producing plant in the United States. Let me say that again. The largest auto producing plant in the United States. The annual production right now, 600,000 vehicles. So when you take a look at overall brands, Tesla has jumped from #10 all the way up to #2.
And then Tesla announced their Q2 2022 deliveries. However, it was well known that the number would be weaker due to the Shanghai factory being shut down due to the lockdowns in Shanghai.
Tesla quarterly sales coming in over the weekend, disappointing. How big of a disappointment was it?
They had expected, and investor community analysts had expected a drop off because the factory in Shanghai was not operating for several weeks. We know all about the big lockdowns in Shanghai, and of course Tesla was affected by that. The comments since then seem to have been broadly optimistic. The factory has been going gangbusters, we hear, since then.
Gangbusters indeed, with Tesla cracking over 70,000 vehicles produced in China in June, with a record month. So how did Tesla end up doing in Q2?
And when you look at the numbers, and here they are for the second quarter, it is a beat on the bottom line, but a miss in terms of revenue. The bottom line coming in with earnings of $2.27 a share. The street was expecting earnings of $1.81 a share. Revenue coming in just shy of expectations at $16.93 billion. But here's the metric that a lot of people are going to be focused on. The automotive gross margins, ex zero emission vehicle credits, which is important here, is 26.2%. So even further compression than what we initially thought here. This is about a company that, as it has these margins, those margins are really, that's the difference maker between Tesla and the rest of the auto industry. And when they were 30 or 31%, that's what a lot of people, especially the bulls, were hanging their hat on. They were saying, look, you're never going to see margins like this out of GM and Ford or Volkswagen. They're down closer to 12 to 15%.
Also to add, Tesla has been strengthening their balance sheet, paying down their long-term debt while cash on hand has remained steady. And now, let's check the expectations for the second half of the year.
Now, the expectation, I should point out, is that they are going to be increasing their production in the second half of this year. In fact, the delivery estimate on Wall Street remains at over 1.4 million vehicles. That's quite an increase from where they are in the first half, where they only, I think they delivered 559,000. So they're going to have to deliver close to 900,000 vehicles if they are going to make that estimate for the second half of this year.
So that wraps up Q2 of 2022. To summarize the quarter, here's Elon.
Q2 was a unique quarter for Tesla due to a prolonged shutdown of our Shanghai factory. But in spite of all these challenges, it was one of the strongest quarters in our history. Most importantly, in June, we achieved production records in both Fremont and Shanghai. And huge thanks to the Tesla Shanghai factory team who sacrificed a lot to get the factory back up and running in June and achieve a record output. Also, making good progress with production ramp with Berlin. We achieved an important milestone of 1,000 cars a week in June, and we're expecting our Giga Texas to exceed 1,000 vehicle per week milestone hopefully in the next few months.
In the next episode, Tesla unveiled a product that has the potential to change what an economy even means. If you enjoyed the episode and want to help the channel, Patreon is the best way to do so. And also, a big thank you to all Patreon members and Ice Lake Investments for making this documentary series possible. So till next time, I'll catch you guys soon.